Everyone talks about the digital nomad dream, working from Bali, Lisbon, or Chiang Mai while earning online and living cheaper. It sounds amazing, but nobody talks about the boring part: taxes. The kind that can appear years later with penalties, frozen accounts, or one big question: where exactly have you been living? That is the digital nomad tax trap, and most people notice it too late. The big mistake: I don't live anywhere, so I don't pay tax anywhere. This is the line many new nomads tell themselves. They leave their apartment, sell some furniture, buy a backpack, book a one-way flight, and suddenly feel like they have escaped the system. No permanent home, no office, no fixed address, no problem, right? Wrong. Tax authorities do not care about your main character energy. They care about facts. Where is your legal home? Where is your business registered? Where are your clients based? Where do you spend most of your time? Where is your bank account? Where is your family? Where is your driver's license, voter registration, property, health insurance, or company address? You may think you are location independent, but to a tax office, you probably still look connected to somewhere. That is the trap. Digital nomads often confuse being physically free with being legally free. Those are not the same thing. The 183-day myth. A lot of nomads have heard this rule: just don't stay in one country for more than 183 days and you won't owe tax. This is one of the most dangerous half-truths in the nomad world. Yes, many countries use 183 days as one factor for tax residency. But it is not the only factor. Some countries look at your center of life. Some look at your home, family, business activity, local ties, or intention to return. Some can tax you even if you stay less than 183 days, depending on what kind of work you do and where your income comes from. And here is the funny part. You can avoid becoming tax resident in the country you are visiting, while still remaining tax resident in the country you left. That means you are not tax-free, you are just badly organized. It is like checking out of a hotel but leaving your luggage, passport, wallet, and phone charger in the room. Your home country may still want you. This is where things get uncomfortable. Many people think leaving their home country automatically ends their tax responsibilities there. In reality, it depends on the country. Some countries tax based on residency. Some look at domicile. Some look at personal ties. And if you are American, the situation is even more intense because US citizens and resident aliens generally have to report worldwide income even while living abroad. So yes, you can be drinking coconut water in Thailand and still have paperwork waiting for you back home. Even if you qualify for exclusions, credits, or treaty benefits, you usually still need to file correctly. Not filing because I was abroad is not a strategy, it is just a delayed headache. And tax offices are not impressed by your travel photos. The digital nomad visa confusion. Another trap is the digital nomad visa. A country says, come live here and work remotely. Sounds simple. You apply, get approved, move in, and think, great, everything is legal. But immigration law and tax law are not always the same thing. A visa may allow you to stay in a country. It does not automatically mean your tax situation is solved. Some digital nomad visas offer special tax treatment. Some do not. Some require proof that you pay taxes elsewhere. Some expect you to register locally after a certain time. Some look friendly on the website but become complicated once you actually live there. The marketing page says, work from paradise. The tax rules say, please read 47 pages of legislation and consult a professional. Not exactly the same vibe. But I'm paid online, this one is also common. A freelancer says, my clients are in the US, my bank is online, my company is registered somewhere else, and I'm working from CAFs. So where is the income really earned? Good question. Unfortunately, tax authorities also ask that question. Remote income can still create tax issues. If you are physically doing the work from a country, that country may care. If your company is registered in another country, that country may care too. If your clients are based somewhere else, there may be withholding, reporting, or source income questions. And if you are running a business while constantly moving, there is another scary phrase: permanent establishment. That basically means your activities in a country might create a taxable business presence there. Not every nomad has this issue, but business owners, Consultants, agency owners, and remote teams should not ignore it. You may think you are just opening your laptop. A tax authority may think you are operating a business. Banks know more than you think. A lot of people still act like international finance is invisible. It is not. Banks ask for tax residency. Payment processors ask for addresses. Crypto exchanges ask for ID. Countries share financial account information. Platforms keep records. Your invoices, IP addresses, client contracts, and bank transfers can create a trail. The old fantasy was, I'll just move around and nobody will know. That fantasy is dead. Modern tax systems are built around information sharing. You do not need to be rich or famous to appear on someone's radar. You just need enough mismatched paperwork. For example, your bank thinks you live in country A. Your company says you operate from country B. Your visa says you are staying in country C. Your invoices show clients in country D. Your Instagram says you spent 6 months in country E. That is not freedom. That is a spreadsheet waiting to explode. The real trap is not always the tax amount. Here is the part many people miss. The biggest problem is not always paying tax. Sometimes the actual tax bill could have been manageable if planned properly. The real problem is confusion. You do not know where you are resident. You do not know where to file. You do not know which country gets first rights to tax your income. You do not know whether you need a local registration. You do not know if your company structure still makes sense. You do not know what records you should keep. Then 1 year becomes 2 years. 2 years become 4. You keep traveling. You keep earning. You keep ignoring it because nothing bad has happened yet. The cheap country illusion. A lot of nomads move abroad to reduce their cost of living, and it can work beautifully because rent, food, and transport are often cheaper. But saving money on daily expenses does not always mean your financial life is optimized. A cheaper lifestyle can still become expensive if your tax setup is messy, because saving a few $100s a month is pointless if you later face a much bigger tax problem. That is why serious nomads do not only ask, where is cheap? They ask where they are tax resident, where their company is based, where they can legally stay, where they can bank, and which country may still expect tax from them. That is the difference between travel mode and adult mode. How nomads accidentally create double taxation. The nightmare scenario is being taxed by more than one country. This can happen when one country says, you are still our resident, while another says, you stayed or worked here enough for us to tax you too. What smart digital nomads do differently? Smart digital nomads do not aim to pay zero tax, they aim to stay clear and organized. They know where they are tax resident, track their days in each country, understand visa rules, keep clean invoices, separate personal and business money, and speak to a tax professional before problems appear. Keep a tax travel log. Keep a simple tax travel log with your entry and exit dates, flight tickets, visa details, accommodation records, invoices. If this video helped, hit like, subscribe, and share it with someone who dreams of working from anywhere.